Alright guys, glad to have you on board again today. Very quick updates on the flow sequencing because we haven't been discussing this for a little while and I still haven't made a decision regarding whether or not I will include this in the weekly briefings. Well, in the interim, there's no big deal, though we're going to still updating in here because there is a lot to say. We've been waiting for this for a very long time, essentially saying the same old thing, that the market decided not to reverse and build the consequent higher highs and so on, breaking through the third range boundaries of a very long and extended third flow, which we stated we needed to get the hell out of by May 2024. And since then, we've been patiently waiting for the market to install the first durable bearish flow. So the first one is now absolutely pending, so I'm just really a bit in advance in here because we still need to wait till the end of that week, and whenever that box will close at the end of the week, we'll essentially have in here the first sign that next week we'll see the context crossing the moving average that has flattened or even reversed. So these are the elements that we wanted. Remember that the flow sequencing, after terminating the sequence of 3 bullish flows, what you essentially get is a series of 2 bearish consecutive flow, even if you want to go higher afterwards. And also remember that we might have built a monthly market top in here, so we could see a bearish 3 set of flows, okay? So just reversing that thing, we have a bearish low risk area. So it's just like reverse engineer that thing, and we could have a set of 3 bearish flows happening in the H4 time frame. So that's something that we're going to figure out in the distance. However, one thing we know for sure is that whether that is in the bullish side or the bearish flow sequencing, we're going to have to set the moving average and the cross below for the resistant context. So what we have in here is that we're going to have to cross under, and that's essentially what we're going to happen within the next week. So the first flow is there, okay? What we know for sure now is that you just can't trade this first flow, or at least you shouldn't if you have done it for other risk management perspectives like hedging portfolios and so on. Well, you know that we're about to reach the first stage of maturity. That means, well, you can start to look for potential profit taking. Now, if you want to do such a thing, remember that the easiest way to do by is that there is no necessary in here to build a third range boundary, okay? So one thing you know for sure is that this thing can eventually break lower, okay? What it says is that if we do kind of reverse the context here, okay, we'll have a support context building in here. That doesn't necessarily mean this support context can't be broken. We can definitely break through it to create the second flow, okay? So what it says is that, well, out of these kinds of things, if you did trade the first bearish flow, you'd rather like to take your profits on some supports. The tip that I'm going to give you here is that, well, if you don't know where to figure out those supports and resistances, the easiest way is to figure out that this flow that we have built has left some untapped support in the process, because essentially remember that in here we have created and squeezed third range boundary. So you know that this area is a squeezed third range boundary. Essentially, if you draw a line out of this, oh, that's exactly where we're attempting a rebounce now. So this is a target area. The previous third range boundary are essentially targets here. We're retracing back to levels where the bears were trapped. Though, as you figure that one out, we've created a series of those third range boundary being broken. The first one being back in May last year, which is essentially where I personally terminated all bullish activity in the S&P 500, and consequently have been waiting since then. So I think this is where we're going. So this is where I would personally extend my bearish activity up until this area, which is somewhere around 5,300 down to 5,200. This is where I will profit take my hedge position in the S&P 500 for the reasons I have explained. That means I don't know where the market is going. All I know is that there are some bears who are probably locked in the market there, and they're probably going to buy themselves out of the market. So potentially some support to be found there. The reason why I am not doing my profit taking here on this previous third range boundary is because the maturity stage are not there yet. I need to see the bearish context crossing below the moving average. We're about to do it. That also means we still have time to be a bear in this market. I don't think we're done yet with the consolidation. And also remember that flows can extend further and further. You really need to be patient. But on this case, if you actually trade a first flow, you shouldn't be doing it. But if you did, always try to have a strategy with it. To me, the strategy is plain simple. That means So long as I have the maturity stage, I will profit take on the subsequent supports. So that's all there is for you to know, guys, okay? Now, regarding the other assets, very quickly rolling into this, like if you're willing to lose to the WTI, be very careful with that one. They're really trying to break it lower, even though I said fundamentals and structural prices tend to say that this moving average we're trading on the weekly chart is the price to pay for oil. Give it a second to plot. If it wants to, please. Can I get a chart? Okay, so as you can see, the moving average in here is the target area. Otherwise, that's going to be the Bollinger Band. But the Bollinger Band is essentially at $40, which to me makes no fucking sense in the real world. But, I mean, I could be wrong. So, once again, remember, we could all be wrong. So, in here, if this area isn't the area that pays out, well, we're essentially going to have to try again at a later date with the Bollinger Band. So, for now on, it's, well, I don't know if I'm going to be right or wrong. All I know is that I'm buying this moving average. Plain simple. Okay, so that's what it is. For silver, in here, we're in the flow. The flow has gone in. We are reaching advanced maturity stages. As you would see, the context is about to cross over the moving average. Everything is pretty nice and bullish in here. And I expect high highs to keep on going until we're reversed. In order to reverse, that means silver has to fall back down to 24. And I doubt it is going to happen. So until then, well, remember the same old thing. If you're in a flow, either you wait for the third range boundary, which means in the event these prices fall back down, they will rise back up again, and you will have opportunity to profit take on the third range boundary. So you shouldn't be too much scared about the thing. Otherwise, well, when you reach advanced maturity stages, like I say, if you want to be proactive towards the market, you can, of course, set some targets, like whenever prices are trading above the resistant context and so on, or reaching potential technical targets. These are areas where you can lock on manual profits. Always remember that in a flow sequencing, you can't take them all out. The 100% profit taking can only happen on a third range boundary trade. So as the prices rise, you can lock some partial profits. Don't take too much of it out of the game. That's going to be it for this week, guys. I'll see you later.